Hey guys, this is Mr. Forex and this is a new episode of my weekly analysis that I do every week to explain why am I taking some trades and why am I leaving out some other trades. So today we are going to have a look at the New Zealand dollar, euro CAD as you see right here, pound yen again, and also Canadian dollar against Swiss. So if you want to know how I look at markets and how I made my decisions, stay here and we'll see after the intro. So again, this is the first chart that I want to show you. This was one of my trades that I've published on my TradingView, as you can see here. Okay, so I was looking at this chart in that moment and I saw this kind of violent movement right in a place where we had a structure. So when I see price that managed to break into new highs and then it falls immediately, it get caught back from sellers, this for me is a clear sign that that breakout is false. So I've explained my reasons. We are at the key structure zone and you can see on the left we have a support. We had a support right here and this is actually didn't break these highs right here. It break for I think few pips this high here, but I mean the location together with some price action analysis made me think that this was a clear sign of a false breakout. And also one key factor was the RSI was extremely divergent. So I was at this moment and I saw this initial sell-off and then another push down. At this moment, when I see a break of this little low, I convinced myself to take a trade with a small retracement. So I waited to price to touch on the previous resistance, mini resistance, and I take this short. Price immediately fell from a cliff. It went right after the entry right toward my targets, but it didn't actually touch it, and afterwards I came back, but I kept on. I stayed on the trade because that was my plan. And after this retest we saw another very strong sell. So I'm confident on this trade. If we break into new lows, I'm going to move my stop to break even, and I am happy with this trade. So just to explain why I took this one, and I think I hope you can understand my view, my point here. Then we can go to New Zealand dollar. By the way, we actually had one very good trade with dollar yen 2618 trade, and it was right on two targets. I invite you to follow me on TradingView in order to receive an email every time I publish some of this analysis. So why New Zealand dollar? So okay, let's see. If we scroll back to the daily chart, we can see we have recently this break of structure. So when I see a break of previous low, I change my mindset and I'm telling myself that this is a short sign, this is a short bias. I need to put myself into the shoes of a seller. So where I want to take part of the downtrend, we have some key zones. I have highlighted previously this week this zone, but we saw price that didn't show signs of weakness, so we didn't take the trade. And I think this is important too, because you need to have some kind of patterns that you use in order to take trades. You cannot use just structure and entry orders. You need to set up a plan. So I was looking at this chart and I was telling myself, obviously the next key zone is here, because this is the previous structure. But I mean, we can search for intermediate structure zone that maybe in the past acted as support or resistance, and when you see a level that has been tested multiple times and have been respected multiple times in the past, that means that it is actually important for price action, and that you can use that level in order to set up yourself to make a better entry. So if you have an edge, if you have something to grab to, you can make more accurate decisions. So in this case, I scroll my chart and I see there is a particular level that was tested multiple times and was respected multiple times, and that started from here. And if you go back, let's place a line, and you will see that in fact we have lots of tests of this level, and I want to show you because this is very important. So 1 year, 1 year, 1 year, 1 year, 1, 2 here, and you can see also as support 1 here, 1 here, and 1 year. So this is not casual. This is not something that happens at all places. If I place my line here, it doesn't happen. I need to find some key levels. This is a key level. You can see 1, 2, 3 levels. This could be potentially because we have another test here. There are a few zones that actually have multiple tests, and this is very, very important. And you can select some of these levels based on how much importance it had in the past. So I think in this case we have a good level to look for. And also if I scroll back here, you can see more accurately 1 here, 1 year, 1 here, 1 here. Very, very crowd place. So also, what do we note when we go on the lower time frame? Well, we see that actually this level is the same of the previous swing the market had on the recent past on the 4-hour time frame, because this long trending movement can be split into 2 parts: 1, 2, 3. So all this zone between the previous support and the previous resistance is actually very important, because you can place stops above the previous high, so maybe something like this. And if you manage to get an entry at this point in this zone, you can achieve the bottom, because you know that you are in a downtrend. So you know that in all this place, you can gain more than what you lose if you take trades like this with structure. This is what gives you an edge over the market. If you know where you place your stop, if you know that your risk will be smaller than your potential gain, these are all elements that are relevant to the outcome of your strategy. So next we are going to see at pound yen. I shared with you my thoughts on this. We are basically coming back to previous daily structure. Actually, I've published one analysis on this right here, because we had a cipher right here, very good cipher. Unfortunately, I wasn't able to take that because I noticed this formation when price was at the second candle above, after the entry, after the D point, and price didn't come back. So now what are we looking for? we can try every kind of pattern that gives us an edge, and this is I think the major giveaway that I want to share with you this week, and that's that you need to have an edge, and an edge can be provided just with a sound strategy, a strategy that tells you in every cases what do you do, and you don't have to pose questions to yourself. You don't have to wonder whether to take a trade or not. You have to read your trading plan, and you have to know if you can take that trade. It shouldn't be up to you to decide. It should be up to the charts. So, for example, if I see the price creates some kind of patterns, I want to long this market, hoping for a continuation in my direction. If we see something like this, I am interested in taking this trade. Right now, I am not entering because I do not have any proper signal to use. So just a quick overview about this, and we can close with Canadian dollar against yen. And this is actually another analysis that I've published, and in this case I want to show you how you can use advanced pattern formations to trade in the same time frame with two different positions. So you basically bracket the market. It is called bracketing because you constrain the price action so that you either are going to be long or short, but you will eventually take a trade in one of the two directions. And this is because we have two different patterns, and the first that is a smaller one, and you can see that from this low here we have a 61.8 retracement followed by another 61.8 retracement. This gives us the conditions to have what is called a Gartley formation that completes at the 1.27 extension of A to B. So along down here in hope to get a reversal, and also if we use this high right here, we can use this because it is actually very close to this one. This time we see a bad pattern because we reach just the 50% retracement, and this tells us that the pattern is going to complete, let's color it yellow, is going to complete at the 88.6 retracement of the whole leg, and this gives another way to trade this market by going short, hoping for a reversal at this level. Either way, we are going to take a trade. Long, short, we don't care. We know that we have an edge on both sides. We know that we can use advanced patterns formations on both sides and following a strategy. So I want you to take this into your mind. You need some kind of graphical figure that allows you to take a trade. So a pattern like this, we can use double tops, double bottoms, are very efficient. We can use 2618 as I showed on Aussie yen. Whatever, we can use whatever we want, at least until we have proof that it works. And the proof, you find the proof by backtesting the strategy. So if you liked it, leave a like below. It helps me, it makes me happy for my results, and if you want to be notified, follow me on TradingView, subscribe on YouTube, and we will see this week on TradingView, and if not, we can see next week right here, this same place, same day as usual. Have a good one.